Hey guys, what's up and welcome to a new Tesla update video. So today, as per usual, let's go over Tesla, let's go over the market, let's figure out what's happening, what we can expect moving in for the rest of this weekend, really maybe even the rest of this month, and just essentially figure out what is happening. So all that being said and done, if you enjoyed the video, don't forget to hit that like button as it does help a lot. This is not financial advice. I am not a financial advisor. And of course, my membership section on YouTube is live. The link is below in the description of the video. For $3 a month, you essentially get my intraday thoughts on Tesla throughout the day and updates and whatnot like these, pretty much throughout the day as we're moving and whatnot. So yeah, with all that being said and done, let's get right into the video. Tesla, unfortunately, with the red day today, not a very red day, but a red day of 0.65%-ish on the day, putting us just shy of $252 per share, which unfortunately compared to the market is going to be an underperformance, but sometimes it just be like that. So let's talk about this and what does this mean? So the most confusing part about Tesla with the way it moved today and just really the structure it's in right now is the very short-term movement. I want to show you some parallels and whatnot. So we're going to go over a bit of information here, but the short-term is the most confusing. Long-term, at least in theory, at least, right? I mean, it should be bullish. Tesla should be very, very bullish long-term, right? Okay, maybe not like, okay, long-term, yes, of course. I mean more like, I guess, kind of medium term actually, right? Mainly because, of course, like I said, we broke out of this bull flag. So technically that should be extremely bullish. So let's talk about what this actually means. So let's go over to the daily. So first and foremost, obviously we had a bit of a bearish candle today, right? Today is a bearish looking candle. It's an inverse hammer candle, right? It's a bearish hammer candle, which obviously happens at the top of trends, right? Where essentially you get pretty much literally the opposite of what an actual bullish hammer candle is. That happens at the bottom of a trend. Let's see if we can spot one up here. This is a perfect one here. So this candle right here, the second green candle right here, is a bullish hammer candle, right? Obviously long wick, short candle thing itself, like the candle itself, and very short wick at the top of it, right? And it's looking great. This is looking like a beautiful bullish hammer candle. This obviously is the flipped, right? Literally the opposite. Not the best looking in the world, but it's pretty damn good. It's a pretty damn good looking one. Now, there's a few caveats here. So the first thing I want to point out is number one, you need follow through, right? As usual with these kind of daily candles that, put some form of print, for instance, quick example, SPY put up pretty bearish looking 3 sets of candles here. This candle followed by this, followed by this candle. These three, a formation like this is essentially an evening star candle, I believe, if I'm not mistaken. I believe that's the name of it. But it is a bearish looking setup. Today, obviously, no follow through, and look at that, SPY is actually up 0.5%, which is great. So, that's just a point that I'm trying to make, that, you need to see follow through for these kind of candles that are potentially bearish in theory, yeah. You want to see follow through for them to really be bearish, if that makes sense. So that's number one. So the parallel I want to show you, though, however, is assuming, let's say, that it does play out, which it might. We'll see tomorrow. Tomorrow will be more telling as to whether or not that plays out, is going to be this. So remember this bull flag that we were in back in the 180s roughly, or whatever, 160s, 180s, that we broke out of, and then we found ourselves in this massive bull flag that we just broke out of, by the way. Well, if we zoom out, first and foremost, let's take a look at this, right? Very similar concept, right? We had a massive rally into a bull flag, breakout, massive rally. Now, same thing. Massive rally post this breakout back here into a bull flag, and now we're breaking out, and we're pretty much right around this stage right over here. So the reason I'm bringing up this parallel, however, is that it's so far looking very similar. You'll notice that often in stocks, things often rhyme, right? It's not going to be an exact replica, right? It's not going to be like the exact same picture all over again, but it often rhymes. History often rhymes as well, too. So same concept applies here. Broke out, nice looking green candle that broke out, beautiful looking green candle that broke out. The only difference is that we had one extra green candle right here, which this didn't have, right? It went straight to this red candle. But the point I'm trying to make here, if you look closely on the red candle over here, the one with a super long wick that essentially is more or less, you can argue, also a hammer candle, right? Pretty much the same concept here as we zoom out once again, right? Same idea, same concept. And then yes, it did fall through further even more, right? But all that did was come back down to essentially retest the breakout, which is a possibility here as well. If we just have a retest of the breakout, right? Which will put us somewhere in the low-ish 240s roughly. So that's going to be important to understand. But the point I'm trying to make here is it looks bearish, and technically the day after that, if we essentially do what we did back there, we'll continue being bearish and we'll come back down to the 240s, like the low-ish, mid to low 240s to retest this breakout. But it just ripped higher from there, and it ripped substantially higher. Now, this doesn't mean it has to rip literally this aggressively, this fast, or this like vertically. But the point I'm trying to make is the fact that, again, it usually rhymes, right? So we'll get like a roughly similar idea of a movement here. At least that's what I'm expecting, right? We'll see, of course. There's obviously things that can happen that, for instance, will break this apart. For instance, if we fall back into the bull flag and especially start closing candles back into the bull flag, which pretty much means under 240, then things obviously start looking a little bit wonky, right? It's not looking as good anymore. But just, very similar situation here that we find ourselves in. Now, one question people have been asking also is naturally, well, where do we go from this breakout? Let's say this breakout does play out correctly. Let's say we do follow through. And let's say we do get a beautiful rally end of December, maybe even January, which, by the way, looking at seasonality, all right, December, obviously a pretty decent month. So is January, right? Looking pretty much equal to December. Pretty nice looking month. And if we switch this from monthly to weeklies, you can see, right, the last 2 weeks of the year are looking pretty darn good. With the last week of the year looking arguably the best week of the year for Tesla, right? That potential center rally, right? So obviously take these with a grain of salt, right? This is for the past 10 years of just overall trend of performance, but it is what it is. So just take that into account, right? The last week of the year usually looks pretty darn good for Tesla. So, take that for what it's worth, right? But, where do we go? So usually the way you measure both flags and the price targets post the breakouts is the pole, right? So what you do, for instance, let's say we take this bull flag that we had back here and we have this pole that looked something like this, give or take, of course, right? Give or take something like this. I don't know what this green line is. I don't know where this green line even came from. So let's go ahead and remove it. I don't know what this green line is. I'm getting lines appearing out of nowhere. I don't know what they are, so I want to go ahead and remove them. Now, right, so this is kind of the idea here, right? So we have this pole that was essentially this, the pole to the first bull flag. Cool. We broke out roughly from around this area. You can see it pretty much brought us almost exactly to the top of this, at the top of the pole, right? So that's kind of roughly the price target, which also happens to roughly coincide with the same pole length that we had here, right? It's pretty much the same pole length. So same concept. Let's take this one, which was the pole for the current bull flag we just broke out of, put it to where we did finally break out of, and technically, in theory, again, take these with a grain of salt, but in theory, this can take us closer to about $350. Now, does it mean it has to happen the same way this did? Does it mean it has to happen this vertically? Maybe it's even more vertically. Maybe it'll be even more substantial of a move. Maybe it'll be less substantial. Maybe it'll take longer, right? The point is the fact that technically this is how you measure bull flags. So take that for what it's worth as well. Now that's important information. Now let's go into the slightly shorter time frames. So on the 65-minute chart, obviously we did break down below this breakout that we had the other day, which we had a beautiful follow through, almost went to 260. We did enter some order block there. If I open up the order block, you can see here, on the daily rather, right, you can see we did get rejected pretty much right at this order block up here, pretty much entering close to the 260s. And we have a massive order block pretty much throughout the whole 260s and even entering 270s. Now, that's important to understand. But if we go back into, what was this thing right here? Go back to the 65-minute chart. We did obviously break back down under this little, ascending triangle that we were in. That did give us this little pop this morning, which of course then we collapsed back further. Now we're close to the 21 EMA. We're holding around that general area that we held pretty much right around here, which is like the low 250s, which is great. The MACD did flip a bearish, which is, a little bit of a concerning sign, right? The RSI is looking okay. Potentially, you can argue this is potentially a hidden bullish divergence because we're technically setting, lower lows on the RSI, but technically we're not really setting lower lows here. Technically, right? So, a little bit of a, so-so hidden bullish divergence, but something to note. But the thing I'm trying to note here is the fact that, we are approaching a potential support, which is, again, this low 250s area, like 252 roughly, right? We are approaching the 21 EMA, which on the 65-minute chart, it likes to dance around it and usually continue in that same direction. So it's looking pretty good. If we go to options, the same concept, right? Options looking pretty bullish now. Earlier today, we had a pretty massive print that was up here that was about 3.3 million in puts, right? It is now gone. Instead, all we have is a lot of green circles, short term as well, right? We have one that's almost a million in 700K in premium. We have a lot of smaller ones like 400K, 187, a lot of kind of several 100K prints coming in here. But if you add them all together, that's a lot of prints. That's a lot of calls. That's a lot of bulls stepping in. And the best part is the majority of them are pretty short term, right? They are pretty short term. Some of them are December 29th. Some of them are December 22nd. So they're weekly or bi-weekly calls. So the bulls are definitely stepping in. So that's important to understand. So the way I'm looking at it is this. To really just truly summarize this and to really make this as simple as possible, actually, let me talk about this first. 15-minute, we have a potential descending wedge here, which obviously is a bullish pattern, looking like it might be looking to break out sometime tomorrow. Now, the thing that's important to understand here is this, right? The thing I'm overall trying to, the message I'm trying to convey is this. Short term, it's a little bit perplexing. The bulls are stepping in, but with this kind of daily hammer candle close, which is bearish and potential follow through, similar to how we had back here, it wouldn't shock me if we come down to the low 240s, which would essentially just be nothing more than a retest of this overall breakout, which in my opinion is perfectly fine. So that's number one. We also potentially can come down to retest somewhere around the 245, 246, which would be a retest of this green bull flag that we also did break out. So pretty much mid to low 240s, all I view that as is a retest. If we start dropping below the 240s, that's where I'm going to start being a little bit concerned here. It's going to start looking a little bit suspicious, but again, closing candles below 240, not just going temporarily below intraday. So important to understand. I'll personally most likely be adding some shares if we do dip down to the low 240s, looking at the potential bounce retest play. Right, so that's the main thing I'm looking at, and that's pretty much the overall short-term thing I'm paying attention to. Medium term, I'm still bullish. I still think Tesla, again, as long as we hold 240, is looking bullish. We have a beautiful breakout. The weekly is still overall looking good, right? The weekly is starting to slowly flip bullish. You can see a very slight green, hint of greenness over here. You can see with a slight, bullishness crossover, which is good to see. Obviously, there's still a lot of time to this week, but again, wouldn't surprise me if we just get a potential retest and then continue on forward, because ultimately this is still a very nice, clean looking breakout. And if bull flags are a good way to measure, the overall price targets, technically, in theory, if we break above my main price target, which is about 265, give or take, then in my opinion, 350 technically is the price target for Tesla on the bull flag. I think it's a little bit greedy. I'm not going to personally be waiting for 350. I'll probably take profits before that. And if I miss a bit of an extra rally, so be it. But I mean, if this plays out if even remotely the same as this one played out, and so far it's looking pretty darn good and pretty similar, maybe 350 sometime in Q1 is a possibility. Maybe. So with that being said and done, that's what I'm seeing. That's what I'm looking at. And yeah, if you enjoyed the video, don't forget to hit that like button. And as usual, I will see you tomorrow. Peace.